Hello, and welcome to a very special episode of the Penny Lane Podcast, where we have some fan favorites who came back. The first is Happy Gilmore, our local favorite options trader, and also it's Squeezy. This is a super special episode because it's both of their third times being on the podcast, and we're so grateful to have them. And this was a wonderful episode. I laughed my face off. Love you guys so much. Appreciate you being here. Can't wait to listen to the episode myself, and I hope you'll come back a billion more times. Before I leave you, I have my son here. Wanted to let you know he and his sister have started their own YouTube channel called Oliver and Quinn TV. We'll link it below. If you got kids, maybe you want to check it out, give them a thumbs up. All right, let's get into the show.
Hey, Blaine.
Hi. So happy you've done that to me before. So on this week's episode, we have Happy Gilmore Trades, Happy G. I don't know what we're calling you now. And the famous It's Squeezy. Oh, now, the two of you have something in common. Dogs, please.
We're both handsome.
No, something in common that relates specifically to the Penny Lane podcast. Do you want to guess?
Who knows? I mean, I don't know it.
Does it have something to do with options?
No. So
much more trivial, I have to imagine.
So last week, Happy came on Benzinga with me when Justin really rudely canceled on me at the last minute.
True.
So let's count the Benzinga show as a podcast episode. That means that this is the third time on the podcast for both of you, and no one else has been on more than twice. Ooh. And you're both coming on at the same time.
That's right. That's right.
I feel like that makes you guys like the kings of the PLP.
I'm down.
Eskimo Brothers.
Some may call it that. Also, this is the first time that Squeezy is meeting Justin, which is interesting because it means he's been on the podcast twice when Justin couldn't make it. One on his own episode and one with Esk Trading. So
what's the
they're
deal there,
for
Justin?
The first time. Yeah.
You know what? I thought we were all afforded a certain amount of sick days a year.
No.
And it fell on my interview.
I just needed to make sure that I used them up. Question: Can I still be a part of the Squeezy squad?
Hell yeah!
Oh, that was a nice ruling by
Thanks,
Squeezy.
Mike. I'd like to be a part of the Squeezy squad indefinitely. That's a good squad. Very enjoyable.
It's a good squad.
What? That's a real, it was a real thing, no?
Yeah, it was a real thing, and it was a great squad while it lasted.
Do we have a chance to ask Squeezy what the
WTF happened?
Yeah, or the history or the future? I don't know. However you want to phrase it.
I'd love to take this opportunity to kind of delve into the bowels of the early Penny Lane podcast episodes, where really Justin and I were united for the Squeezy challenge. I mean, Squeezy, you've played an integral part in the podcast.
No way.
And certainly you've listened to every episode that's ever been produced, so you know exactly what I'm talking about.
Hey, I'm a loyal listener, Blaine. I am. I promise.
Loyal listener. Well, thank you so much. I really appreciate that. Anyway, Squeezy, you were supposed to help me and Justin get a Cabo condo. And we're not in Cabo, and we're not in a condo, so something's happened.
All right.
Yep.
Just pay me $149.99 a month, and I will make your dreams come true.
A little timeshare guy. We got a timeshare guy on the... So,
Happy, you're in college. Have you ever been to Cabo?
No.
No. Do you drink tequila?
Of course.
Cool. So you can partake in this conversation.
Yeah. No chasers allowed tequila.
You would like Cabo. I have no doubt about that. No doubt. Yeah. Anyway, So, Blaine, I'll let you take it away, but Squeezy, what's the deal currently with what you were working on, what you were building, the transition away from it? What is next for Squeezy Squad? Because I've just been a confirmed member.
Well, Little Squeeze happened, and that took more of my time than I could have ever imagined, honestly. I put aside a lot of time for that, and then I also work full-time. So between taking care of the little guy and work, I trade 1 day a week now, 1 or 2. And if I'm lucky, between like 9:30 and 10:30. So I get like 2 hours of trading in a week now. And so like that's a priority for sure. And then the back burner now is kind of like the website I'm working on. And I missed the Squeezy Squad too. That was a good group.
Great group.
Yeah. Blaine, you were a big member of that one.
I mean, I'm a big fan of you. Big fan.
Well, likewise.
So I'm looking. Thank you. I know you had to say that, but I'm going to take it as a genuine compliment.
Yeah, she is a host. Squeezy, that was one. I'll compliment you as well. That's a pretty big thing to just like not let it die off. Like you consciously were like, I'm going to have to shut this down. Time management is a priority. It's going to suffer from a quality and an attention to detail. That's awfully noble and forthcoming of you to be like this. I have to cut it while we're ahead, and then who knows what may be in store in the future.
Right, I appreciate that.
You know, on that thought, Squeezy, when you were about to become a dad, as a mother, I've become a mother twice. I thought maybe you were like overly preparing going into that. I was like, oh, he's probably going to have the baby and be right back on here the next day. And you were really dedicated to that transition into becoming a dad. And I really admire that.
Thank you. I appreciate it. That's one thing for me. I wanted to be a very involved dad. And in order to do that, I have to put aside time during the day for that, obviously. And my wife was on maternity leave all of summer. So I felt like I was missing out if I wasn't, with them a lot of the time this whole summer. So I had to kind of, lightly put everyone down and be like, this isn't going to close because I need to go. But I truly enjoyed it, and it was 100% free, obviously, and it was enjoyable for me as much as it was for everyone else. So I didn't like going away from it, but I think it had to be done because like you said, the quality, I would have been gone pretty much every day. And
yeah,
that just didn't feel responsible on my end.
So Blaine said a very nice thing. I said a very nice thing. Happy, say something very mean about Squeezy.
Hey, go ahead. Do it.
I mean, level us out.
Do it, Hap.
I like oranges better than lemons.
Okay, I gotta go.
Oh, shit.
Damn. That cut.
Perfect. No, we're going to leave that in. Blaine, I derailed you. Sorry. I just had to talk about the Squeezy Squad for a second. So
No, I'm just shooting the shit with my friends here. They were sort of giving me a tough time earlier that I didn't have a layout for them, an outline, and that is my fault. I don't have an outline. I don't actually have a subject for this episode. So what happened was I've been talking to both of them separately about coming back on, and then was talking to Squeezy and was like, do you want to come back on? And then he picked Happy to come on with him. So that's two birds, one stone.
No way.
Uh-huh.
Mm-hmm.
Appreciate that, Squeezy.
What I would really love is if Justin and I could just sort of sit back and let you guys chat. That would be wonderful. Do you feel comfortable?
I mean, if we get a topic, something to talk about, yeah.
Okay,
I'll be
all
fine
right.
with it. I can speak for him.
Here's a great topic. Happy, you came in and I met you as the options guy. And then when pennies heated up, you were day trading penny stocks a little bit more. And then I think you're currently back to more options. And I've always found it really interesting, the parallels that Squeezy posts on Twitter between options trading and trading penny stocks. So Happy, I'm interested in what you're sort of thinking going into the fall. And if you guys wanted to go back and forth on the similarities between those trading styles, that would be great.
Yeah. Well, I mean, based on the way that I trade, nothing is really different for me as far as flipping between options and then playing penny stocks, because the only thing that's essentially different is you have to choose a contract. So obviously that aspect of it is different, but the way I play it, I treat it just as if I was playing equities. I still chart everything just as I would like pennies. However, as far as being comfortable with day trading and swing trading between pennies and large cap options, lately I've been more comfortable swinging options and day trading pennies. So that's pretty much the only difference for me. And I think as we go into fall, I'm definitely going to start to obviously go more towards pennies again, because fall into winter can be notorious for a super hot penny market and a mania. So I definitely want to have my money follow what's hot in the market, basically. I'm still going to be playing options because I just am addicted to options. But I think I'm going to find myself leaning more towards pennies because I can really go heavier and manage my risk much easier than I would if there were options and still get crazy gains. So that's my personal take on it right now.
You know, I find it surprising, Happy, that you actually said you day trade pennies and swing trade options, because I think a lot of people are afraid to swing trade options, especially when the market's choppy. But that just shows how disciplined you are as a trader. I think the biggest similarity for me between pennies and options is how much discipline you really need when you're trading both. They're both very volatile, and obviously one of them can be pumped more than the other, and you can see big drops in both randomly, so you have to protect yourselves in both. I'm more of an options day trader. I don't really trade pennies anymore, but when I did, one thing I noticed is that you can protect yourself a little easier because you see offerings mostly after hours. Am I right?
Yeah.
Okay. And as you know, what's one of the most famous things people will say when they're trading pennies is buy the dip. And with options, I don't really like to do that. You know, you have theta hitting you at all times, and the more you average down, the likelier you get to, getting smoked by theta. So for me, I'm an options day trader, and I swing trade equities usually large cap or mid cap, because I got smoked too many times recently with a perfect setup, a perfect swing setup, I should say, and then just the market being so choppy, and my premium being destroyed. So my personal take on it is really like, I'm a day trader with options. I get in and get out. I don't mess around. And usually I'm done trading by like 10:30, 10:45 for the day. And then I can sit back and watch everyone else make money. But for me, as long as I'm green in the first hour of the day, I'm good, because a lot of times I'll overtrade, and that's the last thing I want to do. So not much from the penny end for me, but I guess Happy and I have a little different style there.
I think for swings, see, I was the same way. I don't know what made me transition more to swings for options, but when not that I discovered this technique, just when I really enforced to myself more of buying further out expiration dates for swinging, it made it so much easier mentally for me because I saw much less red if it went against me. So like when I bought further out expiration dates, it would almost just be like waiting for the move to happen because I just kind of knew it was going to happen. Like I said, the charts don't lie. I can read the chart and I can, for the most part, predict almost what's going to happen. It's just a matter of when. And I've said this a million times now. Options, in my opinion, are all about timing. If you mistime an entry, you can be red for the whole entire trade. So I think the key aspect for me using options to swing as opposed to day trading has been, I just think recently I've got my timing down much better for swinging. And another thing is that I always preach against trying to hit home runs when trading. I found myself when I was swinging, I would say, this isn't good opportunity cost for me to hold a swing for 2 weeks if I don't get, over 100% or something. And I was in this swinger's mentality of trying to catch a huge move. But I found that if I bought further out contracts and almost just waited till it was green, I mean, obviously I would have chart analysis and everything behind it, but it's kind of what it felt like. And then I would take that green when it was there. It's just been hitting at such a high rate for me. Like with the Penn National Gaming swing recently that I did, technically I was waiting for a close over 80 to enter as confirmation, or 85, sorry. And then it actually closed over 85, but I bought in already. So I was like, you know what? I'm not going to try to hit a home run. I'm already up 100%. Basically exited my whole position, and it has done nothing but tank. So I think a big part of swinging options is really taking green when you see it and not trying to hit those home runs, because people, I swear to God, just when they swing, they just get in this mentality that they have to hit it big. Otherwise, it's not good for their money. So that's what's worked for me as far as swinging.
Isn't the whole point of day trading, though, about timing intraday trades? So if you see a pattern or you wait for the way a stock usually acts during the day, I mean, isn't that the same concept, though? Isn't timing the most important part of your day trade? And Squeezy, I know, I don't know what your trading habits are now. It certainly was large cap options. So timing goes without saying there. I agree with Happy, but on that kind of intraday day trading mentality, I mean, timing your entry point and your exit point, again, you only have market hours for that. That's all about timing, right?
Right. And I think kind of blending both of your points together, with day trading, a lot of times I'm either playing weeklies or like 1 week out. You don't have as much time for that move that you want. So you really have to time it well. And if it's working against you, cut it. And one thing Happy said, which I think is so important for people to hear this and understand this, because I think FinTwit has been so toxic with this. You want to buy time and buy further out when you're swinging. I think people see these max gains all over the place on Twitter, and it's always weeklies. People use weeklies every time, and you're seeing 300, 400% gains. And everyone that's newer to trading is thinking, oh, well, the only way I can get those is by trading weekly options. And, going all in, I can quadruple my account in one trade. That's horrible. And I think, like Happy said, he's learning that it's a better idea to buy more time, go for base hits, and just compound over time. That's one thing that I've tried to do as well, Happy. Even when I'm day trading, a lot of the times now I buy like 1 to 2 weeks out at least, because I don't want to get hit with my stop loss a lot of times is like 10% or so, depending on the chart. And I don't want to keep getting hit because of volatility on weeklies. If I see a play that sets up perfectly and I see a perfect entry, I can buy out a little further out and be a little bit more lenient with my position. So I hope that answered both your, or kind of tied both your points together there.
Before Happy jumps in, I feel like that's a very nice trading answer. Like, There's not really a cut and dry answer.
Yeah.
You know what I mean?
I agree with everything he said. And just to add to that, I think the way that I day trade, I think everyone's got to develop their personal strategy, because the way I do it is my timing has just kind of become second nature recently as far as day trading. I know exactly what I'm looking for. I know what part of the day it should occur. Like, for example, at 10 o'clock, I told everyone in the MTA large caps room at 10 o'clock, I always say look for the strongest sectors, like the two strongest sectors, find the strongest stocks within those sectors, and then wait for a consolidation point at around 10 o'clock. And it'll usually form a bull flag. And during that little consolidation period is usually when I pound the table to load those calls, and then we just scalp the move up. So that's an example of timing it perfectly. But you have to be disciplined on the other side if it goes against you. And this is what Squeezy mentioned with the weekly contracts. If you take weeklies, they're much more volatile, obviously. So if you buy 1 week further out, you might be able to hold through one of those little dips if it doesn't break out right away. One other thing, the way I trade is also based off like trigger points, which I mentioned previously on the other podcast episode, I believe. So this will be set by my watch list that I make the night before. And this will just be chart analysis of the daily and the weekly charts. And I'm looking for a key level to break. And that really helps with my timing. And I know a lot of us in the chat nail these plays, because I'm like, just look for these daily levels and, wait for them to snap, whether it's on open or after that 10 o'clock consolidation point. Just wait for that level to snap, and then it should be a nice move. So that helps a lot with timing, and it could really help you stay focused on what setup you want to play and what contract. Like, you can get prepared before it based off your watch list. So
Yeah. So just real quick on that. I mean, I think that's well, I think you could probably talk about this for a extremely long time. But again, you're still talking about timing of, it doesn't matter the time frame of the options contract itself. You're still talking about that timing during the day of when you enter or exit that trade. I do have a question for both of you, since we are just talking about options. Is there a thought process about whether it's a 1 week, 2 week, 3 week, or 4 week contract, and when it comes to that version of timing? Are you just staring at Greeks for that, or is there an additional thought process to kind of that timing based on non-Greek things like a calendar day? How many calendar days? Again, not theta, decay, or anything like that. You're just thinking about it from a separate standpoint. Is there a timing thought process there?
I don't know what Squeezy does, but me personally, I don't focus on the Greeks too much. I have a general idea in my head of what I want, and I know already which contracts reflects what I want. If I know I'm going to hold something overnight, then I'm probably going to buy the additional week, because then the time decay will be less. And I know if I'm scalping something, I want the most for my money, since it'll be a quick move. So I'll go for a high delta, which I already know in the back of my head is at the money or in the money. So I don't really look exactly at what the numbers of the Greeks are at that time. Mm-hmm. But I know in my head the general idea of what is going on, essentially.
I know Squeezy loves a lotto, so you put that aside. What say you?
Yeah, so for me, it's like you have to get a general understanding of your time frame of the trade, like Happy was saying, before you go into it. If you're scalping all day, like SPY, I always trade weekly contracts on SPY if I'm scalping. It's not even worth taking if you're going a week or two out. You barely get a move on them. But let's say this is a move that looks like it has potential for a week or two to move up. I'll buy further out, especially to give myself more time. For day trades that I might hold overnight, like Happy said, it's really, really risky to play weeklies like that week. If you wake up the next morning and it didn't move up at all, or if it moved down, you're already getting hit with theta or time decay. And I rarely look at Greeks too, Happy. I feel like the most important thing for me is like making sure I usually buy just barely out of the money or at the money. Those move the best for me. Also, on top of that, if you're buying just barely out of the money weeklies and you're holding overnight, and let's say the stock moves down 1% the next morning, you're going to get smashed. So you have to be careful. And I think it has to come with what type of trade you're taking. And Happy, you might want to talk about this too. The concept of like rolling up. If a trade goes your way, like a day trade, for example, and you see more potential, you can roll up a couple weeks out or a month out and swing it. But that's just kind of my strategy there.
So real quick, I would definitely love. So we were supposed to talk about Watchlist. I derailed us. That's my fault. But I love the question about rolling up versus rolling out. And I know generally that requires some level of sophistication for folks who are trading options. If you don't know what that is, there's a lot of reasons for both. But I think that's a really good question, Squeezy. But if you want to debate rolling up and rolling out, that would be wonderful.
Go ahead, Hap. I'll debate you.
So rolling out, to my understanding, is you need to buy a further out expiration date because you're either expecting a bigger move or the trade is going against you and you need that additional time to catch the move.
Do you stay away from those generally?
No. So usually I feel like I'll be in the longer term contracts already because I'll have like I said, when I start with my watch list, I look at the daily and the weekly, which is really, I look for swings. But I'll already be eyeing the long-term contract. And then when I see it intraday and I realize it's getting nice volume and this can be a nice breakout, then I'll almost like go down to the weekly and scalp that and then keep the long-term contract, if that makes sense. But I will roll out to usually the monthly contract. I only swing monthlies. So I won't buy like an additional week if it's still technically a weekly contract. I always go to the monthly when I swing. So that's pretty much all there is to it for me. And I usually keep the same strike price. But I just want to see more continuation of the current move that I'm in.
So real quick before Squeezy hops in, Happy, will you ever let an options trade expire worthless?
So sometimes if you really want to try to hit a home run, I guess, it has to be super lotto. Like if you're holding something into earnings and it gaps up and you took puts on it, that might expire worthless. You have no control over that, but not really. I try to not ever let that happen. But if I do, it's money I really could care less about losing, like a super small amount.
Yeah, fair enough. Or you may choose the roll-out strategy. So, Squeezy, I'd love to hear what you have to say. But before that, I have to acknowledge the fact that Blaine is just not a massive options trader and is just asking us if we're talking about rolling joints in marijuana. I'm going to throw it. I'm sorry. She's kidding, obviously. It's a joke.
Well, sorry, Justin. I mean, what am I supposed to think? You're saying rolling up. I only have one,
which is rolling J's.
My mind goes on that. Also, just FYI, Happy texted me before this and said his mom was going to watch this episode. So maybe we keep the rolling joint stuff to a minimum.
We're saints.
Yeah, you're right. Yeah.
Yes. Also, letting options expire. I do it all the time. Like if I buy 5 contracts, I'm going to sell the first 4 and then I'm going to hang on to the last one just for the adrenaline and hope that I make $1 million.
So you're letting
a Hail Mary.
Letting your runners run expiring worthless. I like it.
Hey, if that's the horse you pick, you got to ride your horses. I'm just kidding. That's not a strategy. Please don't listen to me. Squeezy, go ahead.
I think Happy nailed it. And I misspoke earlier. I said rolling up. What I was talking about was rolling out when you go further expiration date. But rolling up would be like, let's say Tesla's just ripping from like, I think it did the other week, like 695 to like 730. and let's say we were playing like 700 strike contract at that point, you could take your profits on that and then roll it up to a higher strike and then continue to do so to maximize your profit. But everything Happy said was spot on. I roll out quite a bit if it's a move I think has longer potential. And I will let us get back to Watchlist too. My bad.
No, there's a shared blame there. That's my fault. Also, Blaine derailed us with the whole weed
Yes,
thing.
you did.
So.
Unreal. Always blame.
Yeah, that's not cool, Blaine.
Yeah, that's not cool. I mean, we all need clear minds, clear hearts, can't lose. So, Blaine, ask Happy about his watch list strategy and techniques, because I think that's overdue, no?
Yeah, I just wanted to ask both of you about Watchlist. You guys both do such a good job with going through charts and preparing the watch list and letting everyone know the triggers. And that's something that I certainly want to know more about. And we got a lot of listener questions about it. So if you guys could just talk about it, that'd be great.
Also, can we get an argument going? So, Squeezy, if he says something you don't like, can you just jump down his throat and tell him why he's wrong, or vice versa? Happy, can you be like, "Hey, Squeezy, that's stupid. That's very old school." That'd be great.
The all-knowing God is Squeezy. So,
oh my God,
fine.
Do you guys want me to also do momentum pennies too?
Yeah, absolutely. Love a momentum penny watch list.
All right. Well, I'll start with options, and then Squeezy can do his, and then I guess we could go back. But so we need a plan.
Here's
because someone didn't bring one.
Yeah, that's exactly right. Here's that layout, Blaine.
You guys are assholes, but also warranted.
All right. When I start my watch lists, I've mentioned previously, I pretty much have a list of tickers I go through every night. That's just what has worked for me.
Wait, Happy, are you watching the same 15 stocks every day, or do you add new things to the watch list, or it's the same ones?
No, so this is just the same tickers. Way more than 15, but I just like charting, so that's kind of why I added a lot.
God, thank you for saying that. I had an argument earlier with AC Texas Hammer about how I just like to watch the same 15, 20 stocks forever and ever and ever. And sometimes I play them and sometimes I don't. And he was like, oh, people don't do that. So anyway, AC, there you go. Somebody does this.
So basically I'll just start going down my list, and I'll start with the daily chart usually. And what I'm looking for is first an overarching pattern. If something jumps out at me, if I see head and shoulders, inverse head and shoulders, symmetrical triangle, I'll look for one of those overarching patterns first. My next step will be getting my horizontal levels. So if I see the level $40 was tested 4 times previously, that's going to be my key level. If I see it's coming up to that level. So that means, let's say it went up to $40 like 3 or 4 times in the past, so it's a hard resistance level. That means I'll put it on my watch list, and the next day I will be taking calls when it breaks over $40. Because when you break a resistance point, if you get confirmation of the resistance break, the probability that you see more upside is high. So that's why it just kind of, when you make these watch lists and find these key levels, it really makes it much easier knowing that in the back of your head that this major key level was broken. So I'll do that in the daily. Usually what helps me, if the chart is sometimes it can be very choppy and hard to see patterns, I'll go to the weekly chart, and I'll do the same exact thing on the weekly chart. I'll look for any longer term patterns. I'll look for my key levels on the weekly. And I always mention how breakouts or breakdowns, any move is more reliable and tends to be bigger if it's a resistance break or a support break from a longer term chart. So I'll really look for patterns on the longer term charts, like the daily and the weekly, and then I'll just find my key levels and then I set my trigger points right at the key levels, basically.
Wait. Actually, I have a question. So back when Penny's Going in Raw first started, I'm a huge fan of the podcast, love what Dan and Hugh do. But when they were first starting, they would ask a lot on Twitter if anybody had any questions or like wanted them to answer anything. And I had this really great idea one time and submitted a question that was like, what do you guys think are the sexiest chart patterns? And thought that they would really love answering it. And then they mentioned it on the podcast, and it was just like, wah, wah. Like they didn't get it. They didn't think it was very funny. I felt kind of dumb, but now that we're here on my own podcast, I'd love to ask you guys, what do you think is the sexiest chart pattern?
Yeah, maybe Squeezy can have a differing opinion so you guys can get your debate. Yeah. There's two I really like. I don't really know which one's my favorite, but a super long-term symmetrical triangle I love. But I really love playing inverse head and shoulders, finding right where that neckline is, that one hard resistance point, and playing that breakout is probably my favorite.
All right, Happy, while I have you, you want to go ahead and let us know what percentage of the time a head and shoulders pattern is successful?
82% for head and shoulders patterns in general.
Nice.
There it
is. Wait, how did you get to
that? When I was teaching myself charting, I just stumbled across some statistics of probability for which patterns work what percent of the time. That's the only one I remembered because it was the highest percent.
Is it a wiki stat, or you think that's a real stat? Just a question.
In my experiences, it seems to be pretty accurate, I guess. Successful meaning it completes the pattern.
Like, you could still screw it up, for the record.
Yes.
Yeah. Perfect. Squeezy?
I think the long-term symmetrical triangle, I think, is the best because we had...
And by best, you mean...
Like sexiest.
I thought you said sexy. There you go. You just wanted to hear him say that. Okay.
Sexy.
My fault.
So, like, for example, Apple, Tesla, Netflix, they all had those weekly chart, long-term symmetrical triangles, and Amazon as well. And you saw when those four broke out, it was insane. The longer the consolidation, the bigger the move, and those four proved it. I think that's the best one you can find. It's like once in a couple of years, probably for each of those big names. You probably won't see another consolidation like that for Apple or for Netflix or Amazon for a while. So those were huge. And so I think that was the best by far. And I'm not sure if I can say this on here, but the B candle that
you can say it.
Well, I don't know. Happy as
Blaine, why don't you say it?
No way. I'm not saying it. Happy's mom's listening.
Boner.
Yeah, that's pretty badass.
I mean, if we're being quite honest, like that's obviously, I mean, I know we're immature, but if you're looking in terms of like the ultimate candle, it's just a boner candle.
But what about a boner candle followed by a boner candle followed by another boner candle?
If you see multiple boner candles, that's a pattern.
That's a pump.
Yeah, I think you're trading GameStop at that point.
I think to add another candlestick pattern, if we're going to go into that a little bit, that I like is the inside bar. I've been trading that like crazy lately. And with me, when I trade that, it's a period of indecisiveness in buyers and sellers. It's consolidation, and you can expect either a continuation in trend or a reversal. And I've had a lot of success with it. I base my watch list on a lot of that. I'll scan for inside bar setups and look to see if the rest of the chart has a bigger pattern forming, and kind of base my watch list on that. So I think Happy was hitting on a lot of good points, but I have nothing to argue with you. I'm sorry, Happy.
Squeezy, I do have a question for you with your watch lists. When you see an inside bar setup, how do you personally determine like your trigger point or where to enter?
That's a great question. I think it really depends on the size of the previous candle, and then also relative to support and resistance before that point. So every chart's a little different. But normally what I'll do is I'll place my call trigger at the top of the previous candle, put trigger at the bottom of the previous candle, because that's showing that there's actually a decision being made. We're going to break above that inside bar formation. And if you look, you can backtest it even in like TrendSpider. You can check for inside bar formations. You can see the trend right after. And almost every single time there's a continuation in a trend or a definite reversal. So that's kind of what I'm checking for. It just needs volume, right, Blaine? Oh, you're muted.
Is this your first podcast?
Justin, we can talk about that later. Thank you so much. But Squeezy, yes. And I wanted to say anyway that we have a lot of Penny Lane Pod merch coming out soon. And there's a whole It Just Needs Volume section. And speaking of that, Happy, I'm so glad you're here because I wanted to see on air public commitment if you would be willing to do a Happy Gilmore Penny Lane Pod collab where we could come up with merch that says charts don't lie.
Oh yeah, charts don't lie.
If I could advise you of anything, Happy, it would be to not just give that away. But yeah, whatever, up to you.
But Justin, I think a charts don't lie t-shirt would be our best seller.
That's fair. So I know we're still trying to talk about Watchlist. So when you Google like how to trade, I feel like inside bar patterns are like the very first thing that pops up. No, like a 3-bar play, for example. Is that you still feel like depending on how you use it, they still can be one of the most effective setups? I guess that's for both of you.
Yeah, so you can't just scan for inside bar, look at the list and say, that's my watch list right there. What I usually do, I start there and then I'll look at the broader picture, the whole chart. And if there's multiple patterns or the chart setting up like an 82% inverse head and shoulder from Happy. And also I like to bake in the squeeze too, a Bollinger Band squeeze as well. That'll help create an actual move. A lot of times, you see an inside bar pattern on a stock that's had like 8 straight inside days because it's just been consolidating forever. And that's not the best pick for like a Lotto Friday play. Like if something's been consolidating for the last week and a half, you could gamble and throw it on your Lotto Friday list, but I would rather pick a stock with more range. So for me, you have to look beyond just the inside bar. I think just picking those and writing them down would not be the best, especially like you said, if you go on Google and you find it right away. If that many people know about it and use it, it's probably not the best. So there's more to it, but that's a good start for me. And I scan for hot sectors or a sector that has a good setup. And then I kind of work off of that for my watch list too. So those are 2 things that I do.
We're throwing around the term sexy. What's currently a sexy sector in your mind?
That's a good question. Energy was hot last week. I want to check my watch list here. Actually, now you're bringing it up.
We've got a little real-time watch list check.
Happy, do you know that's what was hot this week? I traded like one day.
I did the same.
Oh my God. So we're just 2 amateurs here.
What do you guys got,
Well
lives?
prepared.
You have lives going on?
Being studious, as they say.
Study the charts, study the books. Happy, why don't you quiz Squeezy on additional watch list questions.
Actually, can we go back and talk about penny momentum watch list and plays? We had a lot of interest in that.
Okay.
Yeah.
Yeah. So penny Momo plays. So first thing that I look for always, options, pennies, everything, are the major daily levels because they're going to determine everything. So with that, you want to combine that with the previous runners from the week also. So basically, I'm looking for the T2 setup, as we always look for. That's, if you think about it, that's just what Squeezy's talking about with an inside bar. It's just an inside bar setup. But when combined with the fact that it's a Momo runner and many shorts pile in on the second day, really sets up well for a short squeeze. So that's definitely, we already know that. That's one of our top things that we look for when making a watch list for these penny Momo runners. But I will still look for patterns. I just have to adjust the time frame because many times these runners, they gap up like crazy. You use the daily chart, it almost becomes useless because it's so extended. So I'll go to maybe the 10-minute chart and I'll zoom out over maybe about a week, and I'll look for if it's setting up another bull flag. I'll look for if it dips, is it setting up an inverse head and shoulders to reverse? I'll still look for these chart patterns. I'll just have to do it on a smaller time frame. I will also do the same thing with my horizontal levels on that smaller time frame. So if a stock breaks a key level to the downside, that'll be bearish. Same thing for the upside. So that should be your horizontal level. You can say if it reclaims this key level, then it'll be a bullish move because this was the key level for the shorts to crack it under. So many times that could cause a squeeze back to the upside. So I love playing reclaims levels, if that's the right way to say it. So that's one major thing I look for in the previous day's runners when I make my watch list. I also look for things that can make it potentially go parabolic. If it has a very small float and it's just starting to build volume, you could see the volume slowly increasing on like a 10-minute or 1 hour chart or something, then I'll definitely have my eye on that because as we define it, an uptrend combined with increasing volume is a very strong indicator of a continuous uptrend.
Do you have alerts set for that?
Not usually. I have alerts set for level reclaims always.
Interesting.
Because I don't want to miss those.
Yeah. Something that you previously charted.
Let's hit just any ticker I previously charted.
Yeah. No, but I'm just saying that's like when you have previously charted specific levels and you set those price alerts, right? So you've got that watch list set, you've got those tickers that you've charted, and you're looking for that alert to pop off for a price that you think should be reclaimed, and when it does, you're in.
Yeah, so I'll go to I don't know what TOS has, but Webull has an option where you could go to the top gainers from the past 5 days. So I'll usually scroll through that list and then chart those out. I'll find my favorite setups through that, and then that's when I'll set my alerts.
Got it. All right. So we've been talking for 50 minutes, and everyone has familial obligations. So before we leave, we have to talk about the current market, the current past, what is it now, 5 to 6 trading days, maybe more than that, have been pretty tough. And we don't really necessarily know where the market's going. No one does. Everybody has a thought about the month of September. Can you guys talk to us a bit about currently the market trend, the market drop, if we're going to see a pullback, just the overall kind of macro market talk?
I love the topic because I love FinTwit when SPY has like 2 or 3 red days in a row and everyone's calling for like 430 or a big drop. I always then take SPY and I put on the weekly chart and I look at history for the past like 2 years. And if I have it up on my screen, but you can't see it. September and October last year, we had some nasty pullback. We moved from like 350 in SPY down to like 320 in September, and then October had a similar pullback. And I remember last year, everyone was panicking about the election throwing us off and a huge crash coming. And then if you look at the rest of the weekly chart, it's been up from there. So I don't mean to, I know Happy, this is like PTSD because you were worried about some spy calls, but I'm thinking for me, I'm not worried about the market direction right now. I think the important thing right now is to not jump the gun and wait for a solid trend reversal. But I just laugh every time I see a post about how the end is near. And I think the market for fall, we need a little bit of a cool off right now, which if you look last year, the year before that, we had one. And then once we settle, we'll pop back up. You probably can see another pullback before the end of the year. But I'm not looking at anything drastic in terms of, anything can happen in the market. I would never put all my money in one way or the other. But I've learned from the past and realized that pullbacks are healthy. We need them in order to continue higher. So for me, there's no panic involved here. And I think I expect one or two in the fall, but beyond that, I think we'll finish strong this year. What about you, Happy?
Yeah. So what you said with the reversal, it was one of the key points for me. As I always say, charts do not lie. So I will not panic, until the chart tells me to. And, right now it's fine. I have just charting SPY. I know many people have seen a lot of times the 50 SMA has been like the key bounce area. That right now I think it's around 440 to 442 around there. And SPY tapped around 443 today. So it's almost right down in that area, but that's just one of the key areas that I'm looking at to see if we can hold on to that. If not, then I'll chart it beyond that. But as of right now, I mean, like Squeezy said, you need pullbacks in order to lure in more buyers and continue higher. But one other thing, as far as like a big correction coming, I mean, Squeezy can feel different about this, but I feel market makers want to take your money. So they're not going to make it obvious when everyone's panicking that to go short on the market, because in order for them to effectively, quote, take your money, it would have to be, a nasty pullback, kind of unexpected out of nowhere. This seems like it could be a seasonal type thing, as Squeezy said. I never really looked at it seasonally like that. I just haven't. So that was really good input, but it makes perfect sense. So I'm on the same page as Squeezy, and I'll just keep charting it.
I actually have a question about SPY. So, in the Brad interview, we talked about how pennies aren't really tied to SPY. And I know, Happy, you and I have discussed this before, but as penny momentum traders, aren't we hoping for a big pullback on SPY so that money flows back into pennies, or am I just wrong about that?
So from what I heard from, Brad and Steven talking to them, that's essentially usually how it is. But it seems recently that any SPY pullback or like nasty pullback, such as something today, can really kill swings, penny swings. As far as intraday runners, I think that just matters on basically kind of what time of the year it is. Like I said, when we get that penny mania going towards the year's end, they should just almost move separately. That's what I would think. That's what makes sense to me, because the S&P 500 doesn't say anything about penny stocks in there. So that's logically what would happen. It would move uncorrelated.
Do you think I could ask you a clarifying question? I think a lot of people have different opinions about what makes up a penny stock. Some people say it's the ticker price. Some people say it's the market cap, which could just be a small cap stock. Some people could say it's shares outstanding. maybe even average volume. What, in your mind, and don't say all of them, what is your clarifying definition, and yours as well, Squeezy?
My way to determine it, I guess, a lot of it is based off the float and for sure the price too. I would say my price would usually be under $10, and then I like it to be low float. But you can see a lot of these crazy runners. I know Blaine, like we saw SPRT go up to, I don't even know, $40 or so. So clearly that's not a penny stock but anymore. But in my opinion, it still is because the float is that low and it can be pretty easily manipulated or get momentum very quickly or something like that.
Yeah. I mean, it's not necessarily a dumb question. It sounds like a dumb question. We've always said that we want to ask the dumb questions. No one else will. But I think a lot of people have different definitions. Squeezy?
You guys are the penny
Same
experts.
thing.
I mean,
That's true.
I feel like what Happy said makes sense, like the float. I think market cap could also make sense when you call it a small cap. You get into like micro cap. You know, for me, I don't know a lot about pennies, but I remember when I used to play them, the low floats were always very attractive. They got the most movement. Kind of like options if you think about it. The low floats can move quickly. So I think float is a good one. I think volume has nothing to do with it. There's a lot of large caps with like no volume. So I think it's like float.
Nokia.
Yeah. Exactly. I think Happy nailed it though.
Yeah. It's awesome. I have one last question about the macro market conversation. And Happy said all the market makers want to take your money, right? So they're obviously, I mean, well, there's a lot of strategy there. My question, though, for you guys is you see on the news, if it's a pullback, you're not necessarily correcting until, there's a specific percentage drop, right? And a lot of the market makers say that this is a rotation, not a correction. How do you guys decipher between the two? Or do you not listen to any of that and you're just looking at charts, stocks, your watch list, etc.?
For me, I don't listen to anybody else, to be honest. I think for me, I check the chart first. Obviously, March last year was a completely uncalled for, more than a correction. That was a crash. We got killed. But everyone has a different opinion on what a correction is. I think bears love to claim every pullback is a correction when it starts, and then bulls like to claim every recovery is a huge bull run going to all-time highs. So I feel like for me, I need to see, like Happy said, the 50 SMA is huge for SPY, for example. And if that breaks, I think that's when we start talking about, where are we heading? And I'll even throw this in here. September and November last year, the 50 SMA was broken quite a bit. And then it found a bottom in the same spot, actually both times. So I think it really is subjective in terms of like what a correction is. For me, a correction is just a small, or not a small, maybe like a medium pullback to lure buyers. And again, and like Happy said, I want to make this point again. The market makers are not going to say, hey, guys, here comes the correction. Everyone buy puts right now. It's going to happen out of nowhere if it happens. So there's not a lot to see it happening. People will say RSI, and then you can look at RSI, and RSI has been overbought for like 8 months. So not much. Do you have anything to add to that, Happy?
I mean, if I started this, I probably would have had the shortest answer ever by saying, I don't care what the news says because charts don't lie.
Oh,
dang.
But
that's branding.
I definitely agree. I find that people are just so used to the bull market that they call everything, like they see a few red days and they call it a pullback, and then all of a sudden they start panicking that a correction's coming. I don't feel the need for that. Whatever's in front of me, I'm going to play it. But as far as like a correction goes, like Squeezy said, the 50 SMAs is where I'll start to wonder, okay, I mean, are we going to see more downside, or are we going to reverse here in base? You know, it's the same answer for me every time. I just look at the chart. I don't care what the news says. You just have to be aware with the news if they announce some huge thing going on, obviously, such as COVID-19 last year when it caused the crash. That's the only thing that I would potentially, listen to the news for as far as stocks go.
Actually, guys, we only have a little bit of time left, so I'd love to get into some listener questions. The first one is from our PLP MVP Listener of the Year, Booch, who we all love. He wants to know, how do you base your strike and time frame?
Squeezy, you want to start?
I feel like I might have hit on that a little bit, but I think not the strike as much actually, but that's a good question. Open interest is a big component of how I pick my strike. The higher the open interest, I'm more likely to pick that for the strike. I think when I'm picking my triggers for my weekly watch list, I'm looking at open interest, looking at the attractive strikes, the ones that are going to attract more buyers. So I think it also depends on the ticker. Like Tesla, for example, has 1 million strikes. And like I said, I go for the one with the biggest open interest at that point. That's relatively close and a realistic move. I think it's important to pick a strike that's realistic if it's going to be a short-term play. You can get burned. And like Blaine was saying, you can let your runners run and expire worthless. So always an option. So for me, strike comes down to open interest and then your time frame on the move and if it's realistic or not. If it's a longer, for example, with like Netflix recently, I picked 600 as my strike, and those moved because it was ripping and it was realistic. People were paying attention to that 600 strike. The options flow was insane. So I was targeting 600, but that was like I bought 2 months out. If it was a weekly play, I would have tried to keep it to maybe $10 up and, close to at the money. And then what was the second one, Blaine? Was it an expiration date?
Oh, crap. I don't remember what I said.
I think it was expiration date.
It was expiration, I
Okay.
believe.
I think that one's we kind of hit on a bunch already, Happy. It's just it comes down to like what kind of trade you're going to be taking. Scalp, weekly, longer term, you want to look at least a few weeks out. So for like Lotto Friday, obviously you're playing that expiration that day. For weekly watch list, it's up to you. Like if you want to play weekly, just remember it's weekly. You don't want to hold it overnight. If you do, you're nuts. And then if at the same time, if I mean that in a good way, by the way. If you want to play like a week or two out, that's what I do. So it comes down to your time frame.
All right, the next question is from someone named Kess, and he wants to know how you make your Twitter polls, Squeezy.
So Kess is a friend of mine on Twitter, so I don't know how much I'm going to entertain him because he'll just hold it over my head forever. So the backstory here, and I'll make it really quick, is that I was I always post things like, what do you guys want to see more of? And when I posted that, he said polls. And I guess there was a running joke that I post too many polls and try to see what my audience wants to see. So then he just started commenting from that point forward. Can we turn this into a poll? Can we make this a poll? And then the joke just ran from there. So Kess, your answer, what do you ask again? How do I make better polls? I use my brain, and then when that doesn't work, which is like 90% of the time, I just look to see what the audience wants. Thanks, Kess, for the question. Appreciate it.
I kind of wish that I knew that was a joke from Kess, but then we wouldn't have gotten such a good answer. And I also love that he's giving you shit. So props to Kess. All right, next question. I think it's for Happy. It's from I'm the Horse. I'm the Horse. Thank you so much for the question. How do you decide which chart to watch for potential green hammer plays into the open, especially when there's more than one ticker with potential? And before you answer, Happy, I'd like to let I'm the Horse know that is called a hammer candy, and we're going to call it that from now on.
Oh, I love this question because I love talking about this technique. Couple things that I look for. So essentially when we play this, we really want to catch it halt up. So one way to...
Wait, I actually have a bone to pick with this because as Brad says, being caught in a halt up is like the most exhilarating thing that can happen to you in the market. And I'm looking for the hammer candy. I'm playing the hammer candy and there's no halt up. Like WTF, where are the halt ups? I've not gotten one in so long.
I haven't played one since like July just because of that. Yeah, so one way to like help with that, you want to look for the lowest float. The lowest float can just get sent to the moon in half a second. So if you see that dip right at the morning and then it hammers up and it's a super low float, then you can bet on it halting up if the market sentiment is right, which right now it's not. So that's one thing that I look for. I look for consolidation before market open. So I don't want to see it uptrending like very hard right before market open because then it's likely to just sell on open and continue downwards. So I look for a consolidation for, there's no set time frame, but I usually look for around 30 minutes before open. And then that little consolidation will set my levels, and then that will determine if I want it to hammer. It determines everything basically for me. The levels. If I can't, I'm losing my train of thought now. Thanks, Squeezy. That's gotta get out of there.
Yeah.
I'm ready to resume in 1 second.
You're gonna have to bail out. You're gonna bail out on that one. We've had
that killed me.
So for those of you who are listening or watching at home and don't understand what's going on, we have a little chat box here where we're recording where we can talk about what we're going to move on to next or whatever. And that comedian Squeezy just put something very funny in the chat box.
Oh man.
Where were we at? I'm sorry.
All right.
Where were we at?
We got banjo music for that.
I will look for about 30 minutes of consolidation before open of just flat movement. And then I'll use that to set my support and resistance. And I'm looking for a dip to that support or just below that support and then a hammer back over that resistance. So we went over the hammer candy technique, but for a watch list, look for that consolidation before open. You also want to see if it has a catalyst behind it, if it had strong news or something. If it has strong news, it's likely to get more buyers because obviously they'll get attracted to the good news. But those are kind of the main three things that I look for. And also, I want to look for potential upside. If that consolidation point at pre-market lines up with the daily level, then it's going to be an even stronger breakout when it breaks it. So I'll look for if it lines up with the daily level.
True professional, Blaine. Golf clap for Happy. Golf clap. True professional.
Actually, Happy, I want to ask a personal question, which is when I'm making my watch list for the hammer candy, I don't really look at the volume for that day or any new runners, but I like to look at the things that have been running the past day, 2 days, up to the past 4 days. And if they've been running really hard in previous days, then I like to put them on watch for a hammer candy. Do you do that?
Yeah, you just remind me. I forgot to mention, we look for them a lot on the T+2 setups or T+3. So those inside bar setups, they're usually really effective for trapping shorts. I forgot to mention that, so good job, Blaine.
All right, next we have Chad Feldhammer, I'm not sure. He says, please ask if Happy has figured out how to properly pronounce GIF or GIF. I actually don't know. Ooh. So over to you, Happy.
Join the club. It's Jif. I'm sorry. It's not happening. I'm saying Jif all the way.
Jif.
No. Peanut butter. It's not peanut butter.
GIF.
Thank you.
Oh, it took me a second.
You got that one now? Happy makes so much money trading, he has no idea what a PB&J is.
That's all I eat in ramen noodles.
All right, next question is from our cutest and most favorite Gusto. And we've sort of already covered it, so I'm not going to ask the question, but I am going to ask you guys to say your very favorite thing about Gusto.
I can't think of any.
His hype.
I'm just kidding. I love that dude. He knows I'm kidding.
He lacks sleep. He is a child.
My Gusto compliment, maybe it's because the dude just lives in the MTA chat, but he's always the first one to like congratulate someone on a nice play or good day, or to someone had a bad day. He'll be the first one to help cheer them up.
No, but for real, aren't you guys so proud of Gusto and how far he's come? I know I am.
For me, Gusto actually, back before I turned off my DMs on Twitter.
DMs are off? I swear I was just in your DMs like 2 seconds ago.
For people that I'm not following, like, because it was getting rowdy in there. It was mostly like asking for financial advice when I can't answer that. Like, should I sell this right now? But anyways, Gusto came to me and was like genuinely wanting to learn about options. And he was like the most genuine dude. And then I got to know him better. And I'll just say he's like the most selfless person I've ever seen on Twitter. Like he's constantly congratulating others. And he puts everyone else before himself on there, which is very rare in a world full of narcissistic furus on Twitter. So love you, Gusto. I was just kidding before.
Aw, Gusto, we love you.
That's fun. Just real quick, I do want to say I look forward to the day that we are doing this podcast and trading with like the backdrop, if you can see it, of Cabo, and there's like some kind of cool breeze coming through the mic and you can hear it, and that will be because of Squeezy.
Oh my gosh, yes. We should definitely all go to Cabo together.
It's a lot of pressure.
Group trip.
Yeah, for sure. Definitely is.
Also, Squeezy, if we go to Cabo, I'll get to see your face. So I win.
Oh
my God. I just got put on blast.
He's using the excuse that he doesn't have a camera.
Bad.
Blaine, if you threw a Halloween party, no one would ever have any issue showing up if they could all just wear masks and costumes.
Actually, Justin, great idea.
Yeah.
Well, just to wrap
up,
I want to thank you guys so much for just being my friends, hanging out with me on Twitter, and of course, coming on the podcast for the third time. I hope we can keep the PLP going for years and you guys can come back again and again and again. I just had the absolute best time. And for those of you listening, thank you so much for bearing with us while we piece this back together. And I hope you loved it, and we'll see you guys soon.